Accuracy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with the monthly update for the traditional finance portfolio over here on Future Financial Strategies. If it's your first time in the building, definitely make sure to hit that like. If you're getting content and you're feeling like this is adding value to you, definitely hit the subscribe button. Also, if it's adding value to you, it'll probably add value to those you care about, so definitely follow that up with a share. We're going to jump right into it. We're talking about what happened in August, what we did with the traditional finance portfolio, what we're looking at, where we're headed. So we're going to bring it to the stage immediately. So let's go here. So as we can see, we've got all three portfolios showing there. We have a total portfolio value parsed out between all of our portfolios of 17. Well, actually, I guess total portfolio value is $18,069. Now, of the ones that we're actively tracking, because I've got one that's parsed out here that's a family fund, that's something that I'm doing for my, I think, great nieces and nephew. We've got one of them spun up so far. We're getting ready to spin up the second one. Something simple. It's 12 shares, one share of stock a month until they're of high school age, gets handed off at graduation, kind of setting up some generational wealth for the family there, giving them something to start with. At around, I'd say 10, they're going to start actively helping manage the portfolio and learning how it works. So up until then, I'm picking the 12 shares. Nothing super extravagant. Really, it's kind of some out of the mud strategies that I use, but those portfolios will be generating income and building themselves over the decades, years, until they're handed off. So we're really only focused here, which is the $17,289.69, because those are my portfolios that are for me, primarily being the income portfolio right now. We've had some really good movement on the long-term holds. We had to do some sell-offs of our NVIDIA stock. We had some stuff that needed to be paid off immediately, so we did that. But as far as the income, we show this for transparency, transparency purposes. So that way, when we jump over to the Snowball Analytics, which is a little new software that we're using for dividend tracking, we're using it along with the dividend income tracker for right now, but we'll probably be switching over to it. I really like the layout and the insight it gives, but just showing that these are real portfolios. These are real things. Obviously, we also trimmed out our options portfolio. We had to get out of position there. We needed to use that money as well. Long-term holds, we've still got a little bit in there. We've got a position that we're looking to solidify in that portfolio, but we're mainly going to be focused on this income portfolio because that's going to spill down and fund all the rest of this. So with that said, let's jump on into the gusto, into the good stuff. So as we can see, the portfolios are down. Actually, I think we get a little bit of a different. Yeah, I mean, it's down. We went through Bloody Monday. We haven't recovered from Bloody Monday. It is what it is. So we're looking at Snowball Analytics. We're looking at the portfolio value. We are down on all these positions. Looks like to the tune of 2,800. Now, I did a bulk lump sum throw over in the portfolio. So this is the base value is $15,988.60 as it sits right now. We are looking at our dividends, which is what we're looking at. So we got a dividend yield of 91.02%, cost on yield of 77.45% sitting currently. As we're looking, the annual dividends that this should be kicking off, obviously this is going based off of last month's payouts. These are always just based off of whatever they had to begin with. But we're looking at an annual dividend yield of $14,552.94 being projected right now, with a monthly dividend at current holdings of $1,212.75 for the month. So we're looking at it's stepping its way up. And as I said, we broke through the threshold of $1,000. We got $1,093 in dividends for the month of August. That is a metric. That is a metric. And again, as I said, like, we're not looking necessarily at portfolio growth here, but we had I'd say everything dip. Like, the stock market went down horribly on Bloody Monday. Crypto went down horribly on Bloody Monday. And my stocks are both stock and crypto related. So everything took a hit. We're still reeling from the hit. We're still going through the recovery phase from said hit. Bitcoin hasn't fully recovered. We're currently under 60,000 again. It just is what it is. If it's systemic wide, then I'm going, well, this isn't even the underlying asset performing bad, like the ETF performing bad, because you're getting dividends, which affects the NAV of the dividend of the stock. So you're taking a hit every time they do a payout, because that comes out, you're getting paid the profit that they made. So it can't grow the way that a normal stock would. So these aren't growth positions to begin with. But the one thing that did increase was the dividend, and it increased a lot. We increased over $500 specifically in the dividend. Now, over the entirety of the income, we had an increase of $800 for the month, which was really good. But the dividend, we have doubled the dividend. Obviously, volatility helps with these plays. So a lot of my plays are tied to crypto. A lot of my plays are based on that narrative. And we're looking at it and we're going, okay, so we're looking to maximize the income out of the phase one of these holdings. Now, another thing that I've got as far as information for you while we're sitting here looking at this are the phases. So changes that we're going to be making immediately as soon as we open business for the month of September. What are we going to be doing? We are going to be dumping our NVIDIA shares. Reason being, it's not because I don't believe in NVIDIA. It's not because I don't like NVIDIA. I like the NVIDIA, the company. I like NVIDIA, the position, but it's not the position for right now. Now, phase one, I've got this broken down into 3 phases, and we're going to go through those phases. Phase one, extremely narrative focus. So coming from crypto, it's all my crypto positions. I want my Misty in there. I want my Coney in there. And then we're making a couple of shifts. So like we also have Ulti in phase one, which the reason we are using that Ulti position is to have a dedicated feed back into the portfolio to help grow the portfolio. Oh man. As we open up the Ulti position, we're shooting for 500 shares within the phase one. That's going to give us roughly around $500 every month of dedicated, including the money that I'm putting back into the portfolio, of dedicated, this is reinvestment money as a last resort backstop for the portfolio. Now, oh boy. As we're working our way through phase one, we've got Misty, that's within metric right now. The next position that we're looking at, we've got 3. We've got Coney, which we've already started. I haven't been actively buying into Coney because Misty dropped below the metric, which the bare minimum is 9,000. Once it gets around 9,000, I'm putting money back into Misty to build that position up. Obviously, when we get above 10,000, once we start hitting 10,500, I am selling off shares of Misty and cycling those back into the other positions. At present, our focus is getting that ulti to the 500 shares so that it can be reinvested. So we've been buying a lot of ulti. I also threw some NVIDIA in there because I thought for my third position, which is kind of a balancer, kind of a counter market position that's not crypto related, I thought I was going to use NVIDIA throughout the course of the month. We got our payment out from NVIDIA. Not bad, but I'm trying to maximize the income of the phase one because we're using this to pay off debt. We're using it to manage these medical bills because we had some surprise high expense debt that's now been added to the fray. We are looking into all these positions, and I'm wanting to maximize the phase one. Now the phase one is the nucleus, the core. So like this is going to be the core of what this portfolio is at the end of the day. So maximizing that income both helps obviously clear the debt, that's some of the debt that's backing it. It's obviously helping me get a lot of the weight, because like right now we're looking at the debt as an anchor. We're building the ship, but the ship has a big anchor on it and we're dragging that anchor. It is what it is. And the surprise medical expenses have definitely added to the anchoring of the anchor. So as I'm building out the core nucleus of this portfolio, my focus is debt with a little bit of upside, but mostly focusing on the highest income possible to clear this debt as fast as possible without having to sell off underlying assets, because we're trying not to do that. But with that said, so we're going to be switching out NVIDIA for Tesla. And I understand people are going to be like, Tesla, like, oh, it's up in the wind. It's either going to happen or it's not going to happen. If we get Trump in office, it's just not going to be a thing. And I'm like, the volatility and the income off this, it is a high income payer. As far as performance within the yield max funds, it's one of the highest payers. So getting those Tesla shares, especially since Tesla's in a dip, it's on a bounce back from a dip, but like the underlying asset, the Tesla, the company, took a hit. So the way that I'm looking at it is, if I'm buying at the rock bottom price, if I'm buying at the it took a hit prices, I'm not going to be complaining about that. So I'll be switching from NVIDIA to Tesla. I'm also going to be adding in a BitX position, which is a little bit, again, narrative focused, because Tesla is going to be my balancer for this phase of the portfolio. Ulti also a balancer, but I'm not using that to pay debt the same way that I'm using everything else. But BitX is going to have some upside because it's a leveraged position, but it also pays a dividend. So that's going to be the upside potential for when the bull run finally starts, because I am under the full belief that once Bitcoin starts running, once we get back to previous all-time highs and push through them, and once the ship blasts off, Misty, Coney, and BitX will begin to do some major work on as far as upside. Tesla, obviously income play for phase one, but I didn't want every single position in this portfolio to be crypto focused. So then after we get through phase one, what are we looking at there? That's going to be, because the Misty position, we're looking at between 10 and 9K, but we're looking at around 10K is what we're looking at. So that's going to be $30,000 between the Misty, the Coney, and the Tesla positions. We're following up with the BitX as the ringer for this one, for this phase, with a half position. It's going to be $5,000. So that's $35,000. And then we're looking at 500 shares of Ulti, which I think that's going to be around like 500 shares, because I'm already at like 336. So, and that's sitting at market value. It's about 3,000. So, I mean, that's probably going to be about $4,000 or $5,000 also. So we're looking at basically $50,000 for phase one. Now, once we complete phase one, we're moving on to phase two. Now, what's phase two going to be? Phase two, I've got two things that I'm doing. We'll be adding 2 more positions in, but also the first thing we'll be doing once we cross over into phase two and all these positions are set is I will be going back to check my initial core positions of Misty, Coney, and Tesla to make sure that we are at least a target of 500 shares. Now, I know for a fact that Misty will have some shares to buy because the $10,000 does not get us up to 500 shares. Coney, we might hit 500 shares, so we'll get to check that off of the list because that'll be fully positioned. We'll have our phase two qualifications met. We'll have phase one qualifications met once we get $10,000. I honestly think we'll probably be over 500 shares with Coney if prices stay low and we get in and get most of our buys in before the bull run starts. Tesla is another one. Could potentially have 500 shares off of a $10,000 investment. It depends on what the price action does on the ETF itself. But I want to make sure that all of when I get into phase two, all of my primary positions from phase one are at 500 shares. Next, we will be adding in 2 positions. One, we're going to be adding in a weekly payer. We're going to be adding in QDTE with a around $5,000 initial investment. That's what we're going to be looking at. And then we will also be adding back in NVIDIA with a $5,000 initial investment. The other thing that we will be doing in phase two is we will be adding another 100 shares of Ulti. Now that's going to be, again, that Ulti position. We're just cycling back into the portfolio, but I want to make sure that that's a priority. And from a strategic perspective, it's one of the things that has helped me a lot because that way, even if I have a bad month income-wise, since obviously we're paying these down these bills, we've got these medical debts, and like the dust is still settling on the medical debt bills. Like I'm still having to make calls and talk to these people because medical debt, it's freaking wild. So I got to figure out what I actually need to and have to pay versus just giving them all of my money because they'll just bill you for stuff and hope you pay it. It's wild. So the ulti position, if I have to use every free dollar, I'm still making sure that there's growth in this portfolio. And I do want to make sure that that is a priority for me. I want this portfolio, the income to consistently be growing. Now, that's going to cover phase two. Now, when we move into phase three, because that's going to add probably another $6,000 to the portfolio, something like that, or another $11,000 or so. Another I'd say $11,000 to $13,000, depending on what Ulti is at that time. Because these prices could be higher than they are now, or they could still be sitting around where they are now. We don't know. Now, once we get through phase two, once we get to phase three, what are we doing? We're adding in some balancers. Yeah, that's what we're doing. We're balancing out the portfolio. So what are we adding? We're going to add XDTE, another weekly payer. So we're kicking up the weekly. Now, these are going to be half of the first go around. We're going to have a $2,500 initial investment for these that are investment targets. We're going to add XDTE, which is another weekly payer, pretty stable NAV, balance, adding some balance to the portfolio because obviously we started off very high volatility. We're going to also add IWMI, another balancing one. Stable NAV, a little bit of growth on there. It's tax advantaged. We're doing that. Then we're also going to add SVOL, which is another balancer. So we're working our way out to balancers because obviously this portfolio in and of itself is just focused on income. We're not going to have long-term holds in here. We're not going to have any of that stuff. The only thing that we'll have in here is we will have a cash value that will be held in the S&P 500. So we'll probably find an S&P 500 ETF that we like, and we'll be sitting our cash balance in that as a savings account. but that's about it. Like we might keep a little bit, we might split it 50-50. We'll have 50% in cash and 50% in VOO or something like that to kind of hedge that, to give us a little bit of some sort of higher interest saving than just having it cash sitting in the portfolio, because I am not a fan of cash sitting anywhere. So we'll be doing that. And then also as a wind up, our QDTE positions, we're going to be having a target of 250 shares. We'll see what that turns out with after that $5,000 investment. I believe that we're going to be buying up. And then the NVIDIA position, we're also going to be targeting a 250 share position in that to wind out phase 2. Lastly, we will be adding an additional 100 shares of Ulti. Now, obviously, these could change based on performance, but I'm liking what I'm getting out of Ulti so far, and it's been a solid performer for me so far. I mean, obviously, the underlying asset, like if you're looking at stock prices, a lot of this stuff it's highly volatile because of the underlying asset, but also since it's high yield dividend, there's NAV erosion, there's other things that you got to look at if you're looking for growth in a portfolio. Now, the long-term hold portfolio, once we start moving these funds, once the debt is cleared and we start being able to release funds over to buying other positions, the long-term portfolio is going to start building out off of this before we completely leave the workforce. So we'll get some foundational positions in there. But again, the way that I'm doing the budget on the income that I'm wanting is it's also accounting for me reinvesting. And so that's not ever losing sight. It's not like, oh, well, we're just done and like we're just not going to be adding any more assets ever again. Like, no, we're going to be set up to where we're constantly adding assets. Like we also have the Bitcoin standard. So 10% of all the income generated off of these positions, including the Ulti payout that gets reinvested, also going in to buy Bitcoin, just like a retirement savings plan. So when I sit here and you're looking at, when I'm looking at, you know, this $2,800, like, I know that based like dividend wise, we have definitely cleared this since I've started this portfolio. So realistically, I'm not down 14% because this isn't accounting for the dividends that have been paid out that we have used. And obviously we're not necessarily reinvesting them back into the portfolio right now because we don't have to. Like we have free reign on what we're doing with those dividends. But the Ulti position dividends, every month we are reinvesting that. So that's the reason I'm focused on really trying to get that up to the $500 marker, because obviously it's performance based and the dividends aren't consistent, but I'd like it to be floating around $500 based on that position spitting out around roughly $100. Now, the last month's dividend, it was like 76 cents, but it was still it was like 76 or 78 cents or something like that, but it was still like $234. So it's $23 went into Bitcoin. All the rest of it went into the lowest performing position in the portfolio. But open a business. The short, long and short of it is open a business. We will be temporarily nixing the NVIDIA position. We will be opening a Tesla position with those funds to get those switched over, and then we will be catching that. And I understand that, oh, you could wait till the EX date, which true, because it's going to dip. But I was like, I want the dividend, and so like I got the NVIDIA dividend, and I don't know. It almost makes you wonder: do I want to ride out and get the NVIDIA dividend one more time and then switch it over? But I honestly think I'd rather just be seated for the Tesla dividend and see what that's going to look like so that I can get an assessment. Because the Tesla dividend, while the pay was a little bit less because it was like 91 cents last time it paid out, and NVIDIA was $1.25, but I would have more Tesla shares, and Tesla has a much higher, it's like a 30% higher payout overall. So yeah, I'm going to switch it. I'm going to switch my NVIDIA for Tesla as soon as open a business, which will be Tuesday. And you guys will be getting this on Monday the 2nd. So Tuesday, I will be putting in that sell order, and then we'll be buying Tesla at some point during that day. We might dollar cost average throughout the week until closer to the date, just to make sure we're getting some good buys in there, getting position. But yeah, we're going to be making that switch, and we're going to hopefully keep seeing this income continue to go up, because we definitely made some buys when we got paid out at the end of the month for August. We definitely got some more money going back into the market. We've got our payouts getting ready to come up, so it should be as we update this. And the other thing that I like about Snowball Analytics is I had to do just like a bulk. Actually, I might just delete all those positions and actually put them in as they. Actually, I might do that too. Okay, so I'm gonna have to go back through and do some calendar work in the portfolio and see what. No, we'll do it how we did, but like, the other reason I like Snowball Analytics is because it lets you add in buys as you do them. So like, I can wait till the end of the month. I can put in all the buys as they went throughout the month, and it's going to give a better calculation than the Dividend Tracker, which is basically just giving you a projection out. This actually allows you to put them in the date that you did it. So I'm gonna keep looking at that. And we're gonna keep it moving. We're gonna keep it moving until next month, folks. I hope you guys enjoyed. I hope you guys got a lot of value out of this. I hope this kind of helps let you see what it's like just building a portfolio out from scratch, like not being rich, not being at the mountaintop, being able to go through, mine through these conversations, have the conversations. I'm gonna start sharing these on Reddit. There's a really amazing Reddit community. I really like the community over there in regards to having these conversations. It's a little quirky, a little back and forthy sometimes, but there's people over there that are posting good content and doing some really great updates. So definitely somewhere else you could tap in. I'll be posting my videos over there now as well, like making sure that people can see them so that you guys can come over and join the Wolf Pack as well. Until the next time, like, share, subscribe. It's your boy Reckless Rated Arrow, and we'll catch you next month for the portfolio wrap-up update. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.